Welcome to The Explainer. Today, we're unpacking a really fascinating financial transformation. I mean, a true epiphany that literally changed the course of modern wealth. I want you to step back with me, about 80 years ago, to a moment when a young kid made a remarkably bold investment. It's going to set the stage for arguably the most spectacular financial track record in human history. But here's the crazy part. The most incredible piece of this story isn't the billions he ended up with. It's the profound, almost amateur mistakes he made early on and the massive mental shift it took to fix them. Let's dive right in. So, picture this. The date is March 11th, 1942. An 11-year-old boy named Warren Buffett decides he's going to do something big. He takes his entire net worth, literally every single penny he'd scraped together, which came out to exactly $14.75, and he buys 3 shares of City Service Preferred. At 11 years old, he's officially in the market. He's glued to the ticker, feeling the absolute rush of the trade, totally convinced he's cracked the code of Wall Street. He's finally acting like a real investor, right? Okay, let's dive into this because here is the incredible twist. Today, we know Warren Buffett is a guy whose net worth tops $100 billion. But for the first 8 years after making that childhood investment, the greatest investor of all time was doing everything completely wrong. I mean, he had the totally wrong idea about what investing actually meant. He spent nearly a decade trapped in this mindset that causes millions of people to lose their hard-earned money every single day. It's a trap so many of us fall straight into when we first start looking at the financial markets. Young Buffett was caught up in what we're going to call the illusion of investing. He thought stocks were just these things that went up and down. He obsessively charted them. He read hundreds and hundreds of pages of super dense technical analysis, devouring classic books by guys like Edwards and Magee. He read them over and over, totally convinced the secret was hiding in those chart patterns. He literally thought the absolute most important thing a person could do was predict what a stock would do tomorrow, and guess where the whole market would go next week. It was just this incredibly stressful guessing game built on nothing more than hoping a line on a chart goes up. But then something clicked, a monumental mental shift. Right around age 19 or 20, Buffett stopped trying to predict the market entirely. He realized that guessing next week's stock price is just a fool's errand. It's all just noise. Instead, he stopped looking at himself as a stock trader and started seeing himself as a long-term owner of a business. He decided he literally did not care if a stock went up or down the next day, week, month, or even year. He didn't know what the market would do, but he knew exactly what made a successful functioning business tick. So what was the catalyst for this massive transformation? It was actually a single book, specifically Benjamin Graham's classic, The Intelligent Investor. Reading this didn't just tweak his strategy, it completely overhauled his entire philosophy. As Buffett himself put it, he completely rejiggered his mind. From the exact moment he internalized the lessons in those pages, Buffett says he never actually bought another stock. No, instead, he bought businesses that just happened to be publicly traded. Now, what's really interesting about this slide is that it highlights maybe the most encouraging part of this whole philosophy. You really do not need to be a genius to succeed here. As Buffett points out, if he had gone into physics or some other super complex, fiercely competitive field, he might not have done so hot. But investing is this unique game where extreme brain power is simply not required to win. You absolutely do not need a supercomputer for a brain to build generational wealth. Just look at the stark difference here. Buffett actually believes that to succeed in this game, you only need an IQ of about 120. But watch what happens if you bump that up to 170. It absolutely does not mean you're going to do any better. In fact, that kind of extreme intelligence might actually make you perform worse. Crazy, right? What you really need isn't raw off-the-charts intellect. You just need the right temperament and you need the exact right orientation. It's all about emotional control, discipline, and patience, not sheer computing power. So the absolute crucial point here is getting that orientation right. And to help with that, Buffett offers this brilliant mental exercise to just strip away all the daily noise. Imagine for just a second that the stock market simply didn't exist. Let's pretend you couldn't pull out your phone and check a ticker symbol, and there was absolutely no daily price flashing red or green on your TV screen telling you exactly how rich or poor you were that day. Think about it. If there were no stock market, you'd have to buy investments privately. You would evaluate and buy a business the exact same way you'd buy a farm or an apartment building. I mean, if you buy a farm, you don't get a quote on its value every single day, right? You don't panic and sell the whole thing if someone offers you slightly less for it on a Tuesday than they did on a Monday. Instead, you focus entirely on its intrinsic value. You look closely at what it actually produces. You put your savings away so you feel good about getting it back later under any circumstances, because you recognize that building real value simply takes time. This totally shifts your entire orientation. First, you start by finding a game you actually love and can win over time. For instance, Buffett surrounds himself with people who bring out his best because he genuinely loves the process. From there, every single purchase becomes a foundational business, not just some random ticker symbol to be traded. And here is the wildest, most counterintuitive part of the whole shebang. You actually learn to cheer for price drops. Seriously, if you're a true investor buying a business, you are absolutely thrilled when the market goes down because you can buy way more of that great business with the exact same amount of money. If you are a farmer, you'd want prime farmland to get cheaper so you could buy up more acreage, right? And finally, you hold on for the long term. Now, when you commit to holding for the long haul, you position yourself to ride what Buffett considers his absolute greatest asset, and that is the American tailwind. Buffett is profoundly, deeply optimistic about the foundational work and the sheer resilience of the U.S. economy. In fact, through thick and thin, he has literally never had less than 80% of his wealth parked in American businesses. He doesn't call them stocks at all. He sees them as tangible, working pieces of American enterprise. And to prove why betting on this foundation is almost a rigged game in your favor, consider this staggering irony. When Buffett was 6 years old, John D. Rockefeller was the richest man on the entire planet. Yet today, the bottom 2%, the bottom 5%, and your average citizen all live significantly better than Rockefeller ever did. I mean, think about it. When Buffett was born, dentists didn't even use Novocaine. Ouch. Today, we have incredibly advanced medicine. Rockefeller had to travel for days just to see a live event. Today, you can sit in front of a massive flat screen with instant sports replays from anywhere in the world. We've got iPhones, supercomputers in our pockets, global flights. The baseline standard of living has just absolutely exploded. And the stats behind this growth are just mind-blowing. Let's go all the way back to 1789. If you told the Constitutional Congress that their great-great-grandchildren would be flying through the skies and watching sports globally, they would have literally locked you in a lunatic asylum. Yet, a nation representing just about half of 1% of the world's population, people who, by the way, don't work any longer hours than the rest of the world and who have the exact same IQs, fast forward just a couple of lifetimes and they produce and possess over 20% of all the bounty in the entire world. It's an unprecedented economic engine. It has compounded wealth like absolutely nothing else in human history. When you truly internalize the sheer power of that engine and you stop trying to guess all those erratic daily price movements, the daily stress just completely vanishes. Everything changes. As Buffett puts it, the game becomes very, very, very easy if you have the right lessons in your mind about what you're buying. If you know for a fact you're buying a durable piece of a highly productive, foundational business, wealth building instantly stops being a frantic, stressful guessing game. Instead, it becomes this incredibly simple, logical, and honestly really peaceful journey. So, I want to leave you with one final provocative question to help you evaluate your own financial mindset. When you put your hard-earned savings to work, what are you actually doing? Are you just playing the stock market, kind of hoping a line on a chart goes up next week so you don't feel bad about yourself? Or have you completely rejiggered your mind? Are you buying real businesses, welcoming price drops, and just letting time and production build your wealth? How you answer that question might just be the literal difference between endless financial frustration and building a true, lasting legacy. Thank you so much for joining me on this explainer, and I'll catch you in the next one.